Good evening, everyone. We're going to go ahead and get started while we have a couple more individuals that may join us throughout the evening. So I just wanted to first thank everyone for joining us this evening. I do want to mention that if you do have any questions during the conversation, please hold your question to the end. We're going to leave a substantial amount of time for Q&A. First, I would like to welcome everyone. I'm Kimberly Saunders, the president of the Central Florida chapter of the National Black MBA Association. And if you are on your laptops and have view of the screen, you will see our current board: Tanya White, VP of Administration; Camille Dixon, our VP of Finance; Gary Moses, Assistant Treasurer; Maria Bell, our Executive Secretary; and Stephanie Hampton Best, our immediate past president. So on behalf of our current board, I would just like to welcome you again and thank you for participating in our economic empowerment session. We would also like to thank Charles Schwab. They have been a corporate partner now with our chapter for the last 2 years. And I just want to take some time out to give you an overview of Charles Schwab if you're not currently aware of what they have to offer. So with over $4 trillion in assets, Charles Schwab offers investors a contemporary, full-service approach to build and manage their investments, providing investment-related products and services, sophisticated financial planning that combines the best of what people and technology have to offer. Their purpose is to champion every client's goals with passion and integrity, helping their clients take ownership of their financial futures, because investing for the future is one of the most important things people can do for themselves and their families. Hello, somebody. In 2020, Charles Schwab was selected as one of the Fortune Top 50's most admired companies. In 2020, they were also ranked #2 overall in the securities and asset management category of that same list. Also, they held the #1 ranking for innovation in key attributes of reputation. So before I proceed, I do have a short 30-second video that I'm going to show on Charles Schwab. And there is no sound to this if you're not getting any sound. So again, we thank you to Charles Schwab for your partnership, your continued partnership for the last 2 years, and we hope that we can continue working with you all for years to come. Now, before I introduce our guest presenter for this evening, I do want to just talk a little bit about the purpose for this particular program. So within the National Black MBA, our mission is always to lead in the creation of educational, wealth building, and economic opportunity for, of course, those that look like us. And so one of those sessions and one of those pillars that we have is our economic empowerment sessions. So it was only so proper to have Charles Schwab come in and partner with us on this particular program to offer the economic empowerment component. I'm sure, as you all know, that within the Black community, that we lag substantially behind our white counterparts in the level of wealth that we have in those communities. And if you want to go and do some further research, I actually have some raw numbers for you. So if you go to the Federal Reserve website at federalreserve.gov, based on their most current numbers, you'll find that based on the median number of wealth that the Black community has compared to the white community has built $171,000 in wealth, and that's the median number, compared to only $17,600 of wealth. That's the median number for the Black community. So it's very relevant that we have these conversations, not just through these mediums, but also within our families, outside within our communities, within our friends, and within our relationships. So we hope that after this conversation, that you all go back and continue the conversation so that we can continue to grow and close that gap and even go beyond where our white counterparts are. So with that, I will introduce Rudy St. Cyr. He is a private client advisor with over 25 years of industry experience. 22 years of that has been with Charles Schwab, right here in the Central Florida area. Their main office is in Maitland. Rudy has a unique ability of demystifying the art of investing. Rudy currently has several securities licenses, including his Series 7, 9, 10, 63, and 66 licenses, along with the accredited asset management specialist designation. He is also currently a CFP, Certified Financial Planner candidate, in which he will be taking his board exam in September of this year, so just next month. So without further ado, Rudy, it's all yours.
Thank you very much, Kimberly. Wow, sound like football numbers when you started reading off the number of licenses. First of all, I definitely want to thank Black MBA for putting on such a great event. I think it's timely in the sense of for us to actually talk about the creation of wealth, and that's something I'm passionate about, especially within our own community, because that's something that I don't think we really talked about as much, and it's come to us as a more of a foreign language when we start talking about investing and everything like that. So definitely commend you guys for actually putting on the event, and for everyone actually attending the event also. So basically 3 areas I want to talk about in my time that I have is I want to talk about, the question of what's going on with the market. What's the real disconnect? We hear a lot of negative news out there, and why is the market still going to higher heights, and what should we be looking at going forward? Second item I want to talk about is, what should you be doing? Looking at your own portfolio, what you should be doing. And finally, the importance of investing, because some people tend to shy away from investing just because not knowing what to do. Just want to share the importance of how you could actually generate and create wealth, generational wealth, also by investing in the overall stock market. But the big question out there, I know we all turn on the news and we hear, the stock market's up and down. We hear the economy is in shambles, what's going on with COVID and everything like that. And everyone wants to know, what's the disconnect? What's going on with the stock market right now? And whenever you look at the stock market, and when it comes to investing, the stock market is a leading market indicator. So what it does, it pretty much looks at the economy within 6 to 12 months out, in the sense of thinking where things will actually be. So when the market actually pulled back on March 23rd, the market pulled back 34%. That was a big shocker in a sense of, wow, what transpired in that particular situation. And it's rather unique because prior to that, the market was definitely firing on all cylinders. There was nothing wrong. The Dow was making new highs, the S&P 500, the NASDAQ 100. But then the COVID situation came into play, which was a healthcare issue that came in. And once the World Health Organization said that it was a pandemic, all of a sudden, everything shuttered, and we shut down all the economies worldwide, which is unprecedented. So what happened, the overall economy in the stock market, the government pretty much put the economy in a medically induced coma. So when that happened, the market really discounted and really didn't know what was going on. So that caused the market actually to pull down 34%. But when you look at it, and I talk to investors about this all the time, when that transpired, nothing fundamentally was wrong with the overall economy or the stock market. A lot of the stocks that you had, there was nothing fundamentally wrong, but that healthcare issue actually came on over and created a lot of the fear within the market. And if certain investors got spooked and actually sold out of the market at that time because it was unknown, it was unprecedented. But if you stayed in the market, you would actually see the market actually turn itself back around and actually from the the March 23rd low to where the market is right now, the market actually, the large caps actually recoup 45% from that all-time low. So it's actually near the highs of February. And the market pretty much picked things up and said, look, this thing will actually work itself out. We will get a vaccine. They looked at what was going on in China. We saw the Chinese economy started going back online. We saw Greece, we saw Italy, their economy started going back online, Germany. So the market's pretty much projecting, said, okay, well, the US was a little bit behind the curve, and it's noting that, okay, this will actually pass and things will actually go further, will go higher and go better. And that's why you're seeing the market actually making new highs. Now, the other question people had, well, what about the situation that we had with the protests and the social unrest that were actually going on? Why didn't that affect the stock market? Well, if you look back, the stock market, it really doesn't pay attention to a lot of the civil unrest within the United States. It's looking globally in the sense of how the companies will be profitable. Because if we look back in the 60s during the civil rights movement, there was a lot of protesting going on, a lot of violence and social injustice, but the market still kept moving forward because they felt, well, that's not going to stop people consuming, companies producing stuff and things being sold. So the market still kept moving higher and higher. So going forward, that's what we're seeing right now. The market's still thinking, hey, things are going to get better. Even though our economy here in the US has actually retreated just a little bit in the sense of because of the rise of COVID, things are getting better because right now we have all hands on deck. Every medical company out there is trying to find a vaccine or some type of treatment for the COVID situation. So that's one reason why the market's looking at and saying, hey, this too shall pass. Also, one other confidence that a lot of people are looking at with the economy and what the market is looking at is the amount of cash that the federal government is actually putting into the market to actually keep the economy moving forward. That the amount of money that they're putting is totally unprecedented. The Fed chairman said that we will not run out of bullets. We'll do everything we can to keep the economy going. Now, vice versa, when we look back in 2007, when we had the financial meltdown where all the banks were failing, people were saying, well, what's the difference between between that point of time and where we are right now? The difference between then and now is that particular time, it was one particular sector. It was the banking industry. The banking industries did some suspect type of products and stuff like that, which caused their own demise by being over leveraged. But this go around, it affects all walks of life. So the government's saying, hey, we're gonna do whatever we can to keep this economy afloat and push things forward. So right now we're seeing the market's still moving higher because the government is actually working together, even though with the unemployment number, the unemployment checks actually being lower, the $600 actually got reduced earlier, actually last week. The Congress and the Senate is actually working together to get a plan to actually put those funds back into the hands of people that are actually unemployed. So yet again, it's still showing optimism in a sense for the economy. So what should you be doing? That's the big question that clients ask me day in and day out. My family asks me, what should I be doing? Well, the big question is this depends. What is your time horizon? What is your outlook? Should you be buying or should you be selling? Well, it really depends, like I said, on your strategy. Are you looking short term or are you looking long term? If you're looking long term, I think there's no better time to get into the market. Yes, the market may be a little bit high, but I like to tell clients this all the time. You cannot time the market. It's time in the market. It's hard as anything to actually say, okay, this is the proper entry point to get in, because everyone has 20/20 hindsight in the sense of, well, yeah, I would have piled in the market on March 23rd when the market hit all-time low. And then I would have rode up 42%. But the problem is when you're in the heat of the battle and there's so much uncertainty around you, it's hard to make those decisions. But if you have a long-term perspective and long-term plan, you cannot really go wrong with that because you won't need these funds for maybe another 5 or 10 years or 15 or 20 years, depending on how far off you are from retirement. Now, if you're closer to retirement, you still want to engage those funds because you want to make sure that those funds grow and keep up with inflation. Now, you may just want to be a little bit more tactical in the sense of how you add the funds into the market or how much risk you want to take, but it just primarily depends on what your risk tolerance is and your time horizon on buying those stocks. Because, you know, we turn on CNBC, we read articles, you hear people talking about day trading. Oh yeah, I took the $1,200 that the government gave me and I turned it to $5,000. Okay, that's great, but that's not a long-term strategy. And I think a lot of times people tend to think that it's simple, it's easy to make money in the market. Yes, when the market is moving up, everyone looks like a rock star. You could get some quick wins, but the problem is when the market goes up, a lot of those individuals don't know when to get out. So that's when it comes in to have a plan and a proper strategy. You know what your entry point is. If you're trading short term, what's your entry point and what's your exit strategy? If it's long term, you just want to make sure that you have a proper allocation for your overall portfolio. You don't want to have all your eggs in one basket. You definitely want to have the portfolios diversified. And when you talk about diversified, you're looking at different asset classes, whether it's stocks, bonds, and international exposure, domestic exposure. So that way, whatever area in the market actually does well, you have proper representation. So the prime example I like to always use when you think about diversifying your portfolio is the I-4 analogy. So when you're in I-4, you're in the middle lane, the car in front of you stops, you're sitting there, you look over to the right lane, what happened? That lane is moving quickly. So as soon as you see that, you jump over in the right lane, what happened? The car in front of you stops, and you look in the middle lane where you were at before, the two cars that were behind you are way ahead of you. That's the worst way to actually do investing. When you think about diversification and asset allocation, you want to make sure that your car is actually covering all three lanes of I-4. So it doesn't matter which area of the market's doing well or poorly, you have that proper representation. So once you have that in order, then it's the knack of the art of rebalancing. Because once we set everything up, we just have to make sure that we're not overweighted in one particular area of the portfolio. Another example, I love to use analogies because it breaks it down and makes it simple for people to understand. Where I could actually build a portfolio just like a landscaper could actually come and put a bunch of shrubs around your house. It looks great, right? For the first 2 weeks maybe, and then after that, what happens? The shrubs started growing out of shape, and you have to get the landscaper to come back in and reshape it. The same thing happens with your portfolio. When you have it diversified, stocks may be doing well. All of a sudden, your bonds portfolio is not doing as well. But instead of having 60% of your assets in stocks and 40% in bonds, now you have 80% in stocks and 20% in bonds. You're taking on more risk than you need to. So you have to be disciplined enough to take that 20% off of the stocks and actually put it on over into the bond side so that we can keep the allocation and keep things in line and you're not taking more risk than you need to. So those are the ideas that I've talked about when we talked about what should you do and what should you buy in a certain situation right now. Why is investing in the stock market important? A lot of people tend to say, well, why should I invest? Why should I invest? Because that's one of the quickest ways to create wealth. Even if you get your first job, that's going to be your first opportunity to start investing in the stock market. Because why? You have a 401k plan. And the 401k plan, a lot of times when you sit down and fill out the new employee paperwork for the 401k plan, it looks Chinese to you. It looks like another language. You just check mark, okay, conservative, or I want to be aggressive. But and even knowing how much you actually want to actually put into the 401k plan. A lot of those things are easy way where you can actually generate wealth because one, what you want to find out is say, hey, how much is my company matching me? If the company says, well, we're matching you 100% up to let's say $3,000, well, okay, you figure out how much of your check that you need to put in to get that 100% matching because that's 100% return. So that's just free money. That's just the first wave of actually starting to investing. And then after that, what you want to do is say, okay, how am I going to have those funds diversified? Do I want to have all my funds tied up in my company stock? Maybe, maybe not. You could have the best company out there in the world, but bad things happen to good companies. We saw that happen to Bear Stearns. We saw that happen to Lehman Brothers. So we saw that happen to, well, Enron wasn't a good company, but a lot of people bet a lot of money on, kept their investments in one particular stock. So if you're lucky enough that you, let's say you have a large position in your company's stock and create a great amount of wealth, what you want to do is actually look into ways to actually uninvest that concentrated position and invest it elsewhere so that you can actually minimize some of the risk on that one particular company stock that you actually have. But I'm a firm believer and in the sense in the stock market. I know clients like to use real estate, and Cedrick will definitely get on that. And I think real estate is definitely a good part to actually have in your portfolio, because it's just another revenue stream. So where I look at it is you just definitely want to build a strong foundation. Let's say with first of all, if you have cash, maybe it depends. If you once you start your job, you invest in the stock market, get that going for you with the free money from your company, and then after that you start saving for the down payment to build a foundation to get your home. Okay, so once you have that investment going, then you get excess cash. Then you can actually figure out, okay, do I want to get rental property to generate some income, and then do I want to invest in some individual stocks to get the growth side on the stock side? And what's the good thing about being in the equity market, it's totally liquid. So if you need $10,000 for an emergency, you could sell the stock and have cash in your account within 3 days. Real estate may take a little bit longer to actually get cash, but I like to utilize the real estate as a part of fixed income, where you could say, hey, that's my fixed income. I'm generating income off of that rental property. So I'll use that as my fixed income, and I'll use my stock side for the equity growth of my overall financial picture. So I think it's good to look at holistically when we look at your economics, look at everything. Just don't say, okay, this is my stock portfolio, this is my real estate portfolio. Because when I sit down with clients, I do a holistic financial plan. I want to know everything. I want to know what you have in real estate. I want to know what you have in your equities. I want to know what you have in your 401k. I want to know what you have in your life insurance. So that way we have a full picture and understand where the risks are and what areas that we need to focus on. And so that way you could achieve your ultimate goal for financial freedom. So that's my my story. I stick with it.
Great, thank you so much, Rudy. And if anyone has questions, like I said, just please hold it to the end. We're going to have ample time for Q&A. So with that being said, I am going to introduce our next speaker, Mr. Cedrick Williams. He is a realtor and broker associate serving the greater Orlando and surrounding Central Florida area. He enthusiastically helps his clients achieve their goals of buying, selling, or relocating. For more than a decade, Cedrick has worked as a skilled, confidential, and trusted real estate advisor to numerous individuals, families, and high-profile clients for all of their real estate transactions. Cedrick understands the importance of giving back to his community. You'll often find him engaged in several charitable organizations, and off the clock, he enjoys traveling, golfing, sporting events, volunteering, and mentoring youth. He is an alumnus of Auburn University and also a member of the Institute for Luxury Home Marketing. So Cedrick, I turn it over to you.
Thank you, Kimberly. And I hope everyone can hear me. If you can't, just let me know. I'm definitely, you can hear me well? Okay. I'm just glad to be on here to just be able to have this conversation within our community, within our family. And I've been doing real estate a while. I never like to say I have mastered it because I learn something new every day in the industry. But one thing I can say, I have seen the good, the bad, and the ugly. And when this pandemic broke out, everybody started actually jumping ship, canceling contracts, trying to get out of the deals they were working on, and thinking we were reverting back to the 2008, 2009 era. But I'm just here to let you know that it's still a good time in real estate. And what I want to have this conversation with us is that unfortunately we're the first to panic. And when the market had what we call tanked in 2008, 2009, I mean, there were homes you can purchase for 30,000, 40,000, 50,000, 20,000, 60,000. And I would reach out to some of our people within the community and say, hey, you should take advantage of this. And they were like, no, I can't. No, I'm not in a position. We're waiting for the market to go down lower. And I would say, you know, I'm not an economist, but how much lower can it go? And people who were well prepared and in position took advantage of those opportunities, and they're cashing them out today, or gaining rent from them, or whatever it may be. But I said I definitely wanted to make it an admission within our community for us to understand we don't run from opposition, we run towards it. We look for opportunity. And I remember back then when I would tell people, yeah, I'm a realtor, they would look at me like I had the plague. But people who knew better and had the resources saw it as great opportunity. Orlando is one of the, I would say, one of the #1 fastest growing cities here in Florida. And when we had the pandemic, things did come to an abrupt stop. But people weren't moving here because of Disney and the theme parks. They were moving here for a better quality of life, the cost of living. And people are still moving here. And we had, I want to say like 15,000 people a week moving to the Central Florida area, just the Orlando area alone, and 330,000 plus moving to the state of Florida alone. So the question is how can we capitalize off of that growth within real estate? So there's always opportunity out there. So what I want to convey is to not get hung up on what we're hearing within the community, within the negativity, because the real estate market, believe it or not, is doing well. If you're below the 400 price range, we are experiencing multiple offers right now. But some people are saying, no, the economy is bad, but there's still opportunity out there. So just dispel that myth that there's no opportunity, or I'm afraid to put my money in the real estate market, because people are doing it and they're taking advantage. Now, I don't say be crazy and overpay. Always look for a great deal, but don't let what you hear within the media, within the news, discourage you of making that opportunity to pursue or purchase any type of real estate. So just to kind of let you know what I'm seeing in the market and what I'm experiencing, and I'm really grateful and humbled because there is a lot of opportunity out there. So if you're on the fence of saying, you know, hey, should I buy, should I purchase, what should I do? My first goal is always invest in self first. If you are renting, you're giving your money away, and you definitely want to change that strategy. Now, a lot of people always say, well, I like to rent because I don't have to worry about fixing this and fixing that. And to me, that's really just an excuse, because I would rather fix this and fix that, let my money grow, than to have someone at the end of the year, I have nothing to show or gain. All I can do is move my furniture and barely get my security deposit back. So if you're thinking, okay, where do I start in the real estate industry? Invest in yourself first. What do you own? Do you own a piece of property, or is there any opportunity for you to own a piece of property? And don't be afraid to explore that opportunity. And then the other thing is what market I see now probably having a little struggle is the commercial market, because now you have people staying home, not as many people going to the stores. And you see a lot of stores and businesses kind of shut down or either scaling back of some sort. So I do believe there's going to be an opportunity in the commercial market. But what I want to convey as our community is to always be prepared and ready to take advantage of opportunities when they present themselves. And that's how real estate, of course, the stock market, when it's tanked, people who saw the opportunity, and Rudy can attest to this, jumped right in and started purchasing stock that they couldn't get years ago. But they took advantage of the opportunity. And with the real estate industry is keep your ears and eyes open for opportunities, because they do exist. There's this thing I like to say, which I heard and I kind of adopted as mine. You don't wait to buy real estate, you buy real estate and you wait. And it is still one of the #1 vehicles to accumulating wealth. And then within our community, we have the opportunity to create wealth through real estate. Whether you want to buy a rental property, or whether it's your first home and you want to upgrade to the next property, you can take your first home, rent it out. You can pull a little equity out if you want to. I mean, it's a vehicle to get you to the next level. And what I see within our counterparts, they're well prepared, they're ready and eager to take advantage of opportunities. So in our community, I just want us to eliminate that fear and doubt, because people are out there buying property. And do I see the market like 2008 and 2009 when we went through that major dip? I don't see it like that, because banks are not in the market to own real estate. They're in the market to give loans. So banks learned quick, even though they learned late within the game, that they don't want assets and they don't want the liability. They don't want to have that liability on them by having real estate. So what they're doing now is anything possible to keep people in their house, whether there's a repayment plan, whether there's a forbearance, whether there's a putting the mortgage on the back of the loan, or however, whatever they can do to assist people to stay in their house. That's what they're doing. So I don't see all these homes just popping on the market because people can't afford them. And especially with this being a global pandemic, the banks are doing what they can to help people stay in their home. So if you're looking for the bottom to fall out or to tank, I would say within a nice way, you probably have to keep looking, because I just don't see that going on right now. But what I want everybody to definitely understand, take advantage of the opportunities, because they are out there. And if we have people that are still moving to Florida, we live in one of the greatest states, really. I know we have our issues, but a lot of people want to be in Florida. You will be surprised. And how can our community take advantage of that that's going on? So that's it with me with real estate. If you have any questions, I'll be more than happy to answer. I could be here all day. I'm passionate about it, but I do want to allow for anybody who have any questions.
All right, great. Thank you, Cedrick. And as long as Florida man is not roaming around there, we'll be okay, right? Good news. All right, so we do have a couple of questions that came in. So the first question is, this is more probably directed towards you, Rudy. With the current pandemic and looming elections, what would a diversified portfolio of mutual funds and or ETFs look like to obtain an 8 to 10% return for long-term investing for at least the next 10 years?
Good question. So it really would depend. I mean, if you're looking at, it's going to be, because the market, the S&P on average returns around 7 to 8%. So to get around a 10% return, you're going to be taking a lot more risk. You'll probably be more tilted more towards the growth stocks, but there'll be a tremendous amount of volatility. especially with the pending election, the opportune time is what I'm looking at when I'm telling clients is that the month of October, we're going to see more than likely to see heightened volatility more than we see now, because it's not because of who's going to get, it's the unknown of who will actually get into office. The market hates uncertainty, and that's the key there. So if it's something that you're looking at, you're probably going to leverage a little bit more towards the growth equities. But I would say look around that October timeframe, just because of what's going to go on where, if the Democrats actually win the House, it depends on how, the Trump supporters are actually going to react in the sense of with their investments, because they're fearful that Biden's going to raise corporate taxes and capital gain taxes. So they're going to be definitely on the defense, but there could be some opportunities in the sense to buy in. But yeah, you're probably going to leverage a little bit more on the growth equity side. It's just going to be volatile, though. I'll be honest with you, because that's going to be a tough number to actually get consistently that 10% return. You have your mute on.
Thank you so much. Cedrick, a question on rental property. If someone is looking to find rental property at this time, is it reasonable to find something where they can make a 10 to 15% return on their investment with the current prices?
No, I do think it's tough to make that 10%. You definitely could have made that 5, 6 years ago, but I could see you probably being able to pull a 7 or 8. But it will be tough to make that 10 to 15%. So and then it depends on what part of town you buy or wherever you see opportunity. My take is you can probably explore some of the other areas within Central Florida that are up and coming, and one would be, believe it or not, is DeBerry is an area that's starting to up and come, because the average home price here in Orlando now, you're right at around $285. And granted, you can find some things cheaper than that, but it is very, very tough to gain that return once you rent it out.
Okay. Okay, thank you much. And if anyone has any questions, we will allow you to unmute. So just you can give us a thumbs up or raise your hand if you do have a question, and unmute yourself so that we can acknowledge you and you are able to ask a question and follow up if you need to do so. So the next question in the chat says, someone had a conversation, this is actually Stephanie, with her nephew. He is working, but as a contractor. So does he not participate in a 401k plan? She told him to look into an IRA. So what suggestions would you have for someone that may not have a 401k plan available to them?
Yep. So if they don't have a 401k plan, there's a couple of options. They could do an IRA account or a SEP IRA for self-employed individuals. And with the SEP IRA, you can have a larger amount of contributions that you could actually put in. I believe it's around 15,000, I recall, if they didn't change it. But yeah, there's just a couple of options. If they don't have that much and their earned income is, let's say it's not as much as that, or they don't want to go through the paperwork on the SEP IRA, the simplest thing is set up an IRA and start there, and start looking at maybe one of those target mutual funds that automatically set a specific allocation if they don't want to do that. Or they do have these new, we also have it also where you could buy fractional shares. So like, Amazon costs $3,000 a share. You're able to buy a fractional share in Amazon, Apple, just putting a certain amount of money into a week or a month or whatever the case may be. But yeah, we can do the IRA would be probably the easiest way if you're just looking to get started.
Thank you.
Welcome.
Did someone have a question? Okay, another one for Cedrick. Do you see a lot of activity with people flipping homes at this time?
I'm still seeing some, but not as much as I used to. within, say, 3 years ago, because the margins are just a little tight right now for what you can get the property for. But I'm seeing a lot of buy and hold, really trying to take advantage of the appreciation. Because once you put your expenses in, your costs, I think it makes it a little tougher for some people to flip. But what I've seen, the challenge is with people that are flipping, they don't have a good team, people behind them to do the renovation. So that's where it really gets costly. But I think if you have a good team to do the renovations and you can keep them busy, then yeah, you can probably cut some of that overhead down. But at the same time, I'm just seeing the margins are a little tighter now because of the opportunities of finding distressed properties. So they're not just available like they used to be. So, but what I am seeing is some people, like I say, expand the area, maybe not Orlando as much. Like I have one friend who's, now I wouldn't do this, but they're doing very well. They're out in Missouri. So some have left the area to go to different places, but that requires a lot of your attention and time. But there's opportunity out there, but within this Orlando market, it is a little tighter.
Okay. Okay, thank you much. And actually, while we have a couple more questions coming in, but while we're doing that, if Cedrick and Rudy, if you all could type your contact information, whatever you would like for our guests to have in the chat box, so everyone can have either, cell number, work number, email address, so that everyone can have it. Thank you. Okay, next question is, I think we have a caller. Are you trying
Yeah.
to? Yes, go ahead.
I have a question for Roddy and both of them, actually. So the first question is, I was actually in one of your lectures about a year ago as well. We do learn about the 401, the contribution, company contribution, but I think what we lack is, in addition to that, if we're capable of investing more, and personally, that's what I lack. I don't have the knowledge to. So is there any way you can help us in that? And also, the second question to that is, so Cedrick is talking about real estate investment. So I've heard two different opinions from, investors with the stock market, investors with the real estate. What's their opinion in owning a rental home, or do you recommend investing more? If you have the money, then put it more in the stock market because that makes more money, or real estate. What's your opinion on that? Thank you.
Thank you for your question. Whoever wants to go first.
I would say both. I would say both, because you definitely want to diversify. So I would say both. If you're going to own a rental property, like Rudy said earlier, a lot of people who do own rental property use it as a type of retirement vehicle, and it's also a good. I'm not a tax guy, but it's also some good perks there with doing your taxes, things you can write off too. But I think it's a great vehicle to put in place for retirement or to have some future use. Some buy rentals so they can have the pass down to the kid or the child, or some use it for the education. So I think both, in my opinion.
So actually, you touched a good point. That was actually one of my concerns on the tax, because I've been trying to learn in this area, and my understanding is that it actually does count against you as an income, even though you're really not paying or get an income out of it. The principal counts against you. I do understand you can write off a lot of the other stuff, but when you get to the point where the interest is low, and then you're paying most of it as the principal, that becomes your income, and you get penalized on your tax. So if you have any knowledge on that, I mean, I don't want to take up a lot of time, but I would like to learn that.
Yeah, My advice is definitely get with a tax accountant that can break that down. I know just me personally being in real estate, it helps to own rental properties because there are a lot of expenses we can write off with that. So depending on what your profession is, each situation is different, but I do know some people do benefit from owning rental property because of their tax situation. So, but like I say, I would recommend you get with a tax advisor or an accountant to see how you can take advantage of it.
Okay, thank you.
Okay.
And then in regards to if you're maxing out your 401k plan, if you're maxing out the 401k plan, the other option you can do, you could set up a Roth IRA. So that way you could have those funds actually earn tax deferred. That's another benefit for you also if you have extra cash. And then once you maxed out the IRA, the Roth IRA, excuse me, then you could actually possibly look at opening a traditional trading account. I think that'll be a good avenue because that way you're going to minimize your taxes in the sense of you put it into the Roth IRA account, you can be even more aggressive and the capital gains that you make in the Roth IRA account will be tax deferred. So well, tax free in the sense and you won't pay taxes when you actually withdraw the cash out of it because you pay taxes going into the Roth account already.
I understand that one as well. So I guess what I like is on a more traditional. I do max both, and then I lock into when it comes to the traditional accounts where you can just put in the stock market. So if you have some kind of education on that, I would like to gain.
So you mean after you get on the retirement account and then looking to get into the regular stock market, you're saying?
Correct.
So ideally, once you start trading in the regular stock market, where I like to look at it because I think the pitfall a lot of investors have, they compartmentalize each account in the sense of, okay, this is for my retirement and this is for something else. I like to look at it holistically in the sense of let's look at your overall financial picture. So once you figured out, okay, you maxed out your 401k plan and you can figure out what you're invested there. Then we have the Roth account, what investments you have there. And then when we go to the traditional trading account, when you start adding money, you should start looking at what investments you could actually add in that can actually complement the other investments that you have. So you're not pigeonholed yourself only in U.S. large cap stocks or international stocks. So that way you have a good representation throughout all your assets in the sense of you may have all your large caps in your 401k plan. You'll have some international in your Roth account, and then your trading account. You could say, okay, well, I'll put some small caps and I'll put some fixed income there. So that way it'll be diversified overall the whole financial picture.
Okay, thank you.
You're welcome.
Okay, thank you so much for your question. Another question in the chat box is, can an investment account be set up on behalf of a dependent child?
Well, yes, you can. There's a couple of ways you could set up a custodial account for a minor. The challenge with that, and I've seen it where it backfires, is because once you put the cash in there in the custodial account for the minor, once the child reaches the age of 18 or 21, wherever the age of majority is, those assets are the child. So the child can do whatever he or she wants to do with those funds. So it just depends on how much control that you want to have, where if it's for college, you could look at some of the college savings accounts, whether it's the 529 accounts or something like that. But you can do it, but you just have to be mindful that if you do a custodial account for the minor, once they reach 21 or 18, they can go out and buy a car, they can go out and do trips, and it may not be something what you planned for them to use the funds for.
Okay.
I also learned that they can sue you for that, by the way. I asked that question before. So if you don't let them know ahead of time that you have some investment with their name, and they can come back after you. Just thought I'd share.
I could see that happening.
Okay, thank you much. Another question. What are some good investment vehicles for tax-free income? So for people that are receiving tax-free income, what can they invest in to continue receiving tax-free income?
Tax-free income, you're probably looking at municipal bonds. Those are you get the tax-free income there. So then you would really have to figure out, okay, what's the benefit of actually doing it? Especially for Florida, we don't have any state tax. So a lot of people are in a high income tax bracket, like in New York or California, where New York, you could get triple tax exempt because you have state tax, city tax. State tax, city tax and federal tax. So you'll be exempt for those taxes there. So a lot of times it's more the high net worth individuals that are actually looking for that. But sometimes I offset it in the sense of saying, okay, let's look about what the tax equivalent yield that we can actually get. You may be able to get a better return on paying taxes based on the performance of another investment vehicle than rather going down that route for tax free.
Okay. Thank you so much. Do we have any further questions? We have about 4 minutes. We want to make sure we get you all out on time. If you have a question, you can unmute yourself before I ask the final question.
Hey, Kimberly, I just want to point out right quick, if you don't mind, there's this thing, if everyone get an opportunity to just research called opportunity zones, which is kind of like the new thing going on now, where you can buy in a certain zone and fix it up, redevelop or build. If it's within that zone, then you can have your taxes deferred when you go to sell it. But I definitely would advise you to look strongly into it and do some research on it, because that's a new thing out there that's trending right now that a lot of people are taking advantage of. It's called the opportunity zones.
Thank you. So final question for both of you. I know in the beginning we talked about what can we do, within our community. So what are some things that you see happening outside of our community that you're not seeing in our community when it comes to investing, creating wealth, et cetera? What are some solutions do you think that we should be looking into? Where do we start, and what resources do we have available? So I'll allow each of you a minute or less to kind of close us out with that. Or final commentary.
I think the biggest thing is to I see our counterparts do that we don't do, is have the conversation. I think that's the biggest thing. We make money a dirty word. We don't like to talk about how much we make. And net worth and everything like that. That's one of the biggest things, because it's a dirty word. But don't ask me how much I get paid. It's none of your business. It's more, let's have the conversation. Hey, I make X amount a year. This is what I put away for retirement, and teach the basics, and even get our children involved, understanding investing in a sense of, hey, my son, he likes Nike sneakers. Okay. How about we buy Nike stock? So that's the way, if you buy the sneakers, you're reinvesting in yourself, and have them actually start looking at the stock and seeing, okay, hey, this is something I could actually learn from it and see how how it grows. It's just demystifying it, because we're not used to it. It's a foreign language to us, and with platforms like this, I think this definitely opens it up, and we just need to have more conversations and talk about it and be comfortable saying, I don't know. I think that's the biggest thing that we have. We feel that we can't ask for help when we, maybe, I have a doctorate or a PhD, but we feel inferior in the sense of talking to another counterpart and saying, hey, I don't understand how investing works. I have individuals that, they've done well in real estate. They have a real estate platform of over $30 million, and they do venture capitalists, but when they come to investing, they'll say, I don't understand how this works. Please explain it to me. And I think we just need to be comfortable in saying that and seeking help, because there's a tremendous amount of people that look like us that's in the industry that are willing to help out and come across and say, this is what we need to do, because that's what we do. That's what, you know, Kimberly, you do, Cedrick does, and I do, where we love having platforms like this because we never thought of seeing someone, a Black stockbroker. You know, when you see it, or someone, a Black financial advisor, because when they show you on the news or anywhere else, they always look up, they look totally different from us. So we could talk the same language and understand. Stocks and bonds was foreign to me. When I was going through college and I was learning about it, and I told my parents about investing in stocks, and they wanted to do real estate. And I was like, hey, let's take that money and put it in the stock market. They're like, shut up, well, you don't know what you're talking about. Till when they transferred their pension plan to a 401k plan, all of a sudden they started coming, hey, let's talk about investing and everything like that. So I think the key is just keeping the conversation going, and just having more conversations like this and making it a common topic of a conversation within our community.
Thank you. Cedrick?
Oh, well said, Rudy, and I totally agree with you. I'm actually privy because I get to go inside people's homes and I get to see how they live. And what I notice within our community, I go into the closet and it's full of clothes, full of clothes, probably 1,800 square foot home full of clothes. I can go into our counterpart's home, 5,000 square feet, and probably this amount of clothes within their closet, just this amount of clothes. So keeping in mind that I heard this saying that's it. If it's on your ASS, it's not an asset. Keep in mind putting your money in things that can bring a return, whether it's real estate, whether it's within the financial market, not putting your money in things that will not bring a return. I've seen so many people who can't get qualified, not because they have bad credit, because they just purchased a new car and now they can't buy a home or don't have that money to qualify because they just purchased a new car. And we will let a car get in the way of owning something that can generate wealth. So my thing is, watch your spending. Don't put it on you. If it's on you, it's not making you money, bottom line. And then the other thing is find ways to keep the money within the community, working with individuals that are skilled, competent, and qualified, number one, and try and keep that dollar within the community as well. So I think those are two things that we really have to focus on. Definitely getting out of debt. And I know we like nice things, just our nature, our culture. We like nice things, but have the stuff first. Don't let the things have you. And if we could focus on that, I think we could definitely be well on our way to generating wealth within our community.
All right. Well, thank you so much, gentlemen. So I hope that this last hour was very informative to all of our guests, and thank you for all the questions that came in. So to take two phrases that I liked, one from Rudy, just to paraphrase, don't just ride one lane, ride them all, right? Asset diversification, asset allocation. And then, of course, from Cedrick, don't wait to buy real estate, buy real estate and wait. So they have their contact information in the chat box. If you all want to reach out to any of the two panelists this evening, please feel welcome to do so if you have any questions that come up after tonight. And as we mentioned before, continue to have the conversations. We need to continue to have conversations like this. So again, on behalf of the National Black MBA Association Central Florida chapter, thank you all for attending. And if you are not aware of all that we have to offer, just to let you know that we do have a general body meeting on Saturday, August the 29th at 10 a.m. Registration is available, so please go to any of our social media platforms to register. If you're on our email list, you have received the newsletter just a couple days ago, and there will be further correspondence going out about that, but that will give you the opportunity to ask more questions about what we do and also how to get involved. Also, our national conference is coming up September the 23rd to the 25th, and it is 100% virtual this year. So definitely make sure to go to the national website, www.nbmbaa.org, to find out more information about participating in the national conference and career fair. So again, thank you so much. I'm going to go ahead and close out the meeting, and we will see you next time.
Kimberly.